Hey, it's Zachary at Start Trading. And of course, beyond our standard risk disclaimer, we do have the Euro US dollar. And I believe that we are in an uptrend currently. Looking on the daily here, we do have a 23.6% Fibonacci that was tested, and it experienced a bullish rejection, very nice close, formed what could have been an M until right here on the NARM farm payrolls. That is really, really close. We received a very large bullish candlestick. It closed all above here. Today, we have tested the lower level of our active area of supply, but looking on an intraday perspective, we can see we still do have that liquidity gap. It is about 107.3 to 108, so it's about 90 pips of demand, and we can go ahead, we can identify this. We're going to include that wick. I'm going to say all this is an active, semi-active area of demand. And why I feel there's buy limits pending down there really is because of the gap. It would make sense for institutions and professionals that do have a bullish outlook on the Euro US dollar specifically, whether they've analyzed the dollar index. We can take a brief look at this on the daily. Maybe they've checked out the euro, and I mean, we can see something's going on here. We are trending above the daily, or above the 200 exponential moving average, the average of the last 200 days. Calculate that price exponentially and see if you receive where we're at now. But looking back at the Euro US dollar, some confirmations that I do see beyond our 23.6 retracement here is the fact, now this was the NFP candle on this platform, TD Ameritrade's Thinkorswim. There is a gap. Now we could see, because we do have some key fundamental news coming up through this week, a potential retest of the 112,800, maybe a little bit higher. If we hit 113, we will have to see what happens on that price action. But looking at this, our most recent potential downside target here at 112,500 or 112,200 is still about 30 pips away. Now, this zone right here was created from New York on the new monthly candle, June 1st, 2017, 8 a.m. right here. You can see we hit the low. We're going to identify this with an oval. We created this high spike, not quite as high as what happened over here, but we were testing the lower area of this supply. Now we trend, we're creating those higher lows and higher highs within our consolidation, which really from Thursday, New York, all the way until Friday, right before that 8 a.m. candle where we did get some bullish movement come in. Again, we can highlight it. And beyond that candle, we can see here with this second test to the bottom, it is clearly a higher close than that wick, than this wick low. Depending on your style of analysis, you could have perhaps predicted this movement. And where we are at right now, I mean, it is a bank holiday. We're going to the New York session changeover in 33 minutes. And really, we do have a nice bearish candlestick pattern right here. You could have collected, maybe 10 pips. But we can see here on our weekly, although it is still early, this might indicate the push up to the 113,500. If we wanted to be safe, a target could be 113,450. Target 1 on the buy side. And I mean, there's just a lot happening up here where our oval is, the 116,200 price, our 38.2 fib, the 200 exponential moving average, a clear uptrend on the weekly, and even looking at the monthly, we can see we've had some very powerful movements occur. Now, let's take one look here on our Renkos. We can see the true price action. We created this low, consolidated. We're still getting those higher lows, higher highs within this from what happened end of December time all the way to this retest here in the middle of April. And then, of course, the shift in the trend. Now, we're going to still have to see how price reacts in this whole region, because something that we could expect over the next 2 days, even all the way until perhaps London on Thursday, and Thursday would be the 8th. But what if price decides to pick a 30 to 40 pip range? Maybe the low is now, because we're looking at Renkos, these are 50 pip candles, so let's just go back to the intraday real quick. Perhaps the low is, even right here, this whole 112,400, and maybe it's high, picks a 50 pip range, goes all the way up to 112.9. If we create that new high, it will be a very powerful confirmation again for the potential movement. But with that being said, we're going to take one quick look at the US dollar yen and just see what's happening. So on the dollar, given the outlook that we have on the bearish momentum that we're expecting, I could see price making some more movement down to this demand, filling the liquidity gap. The liquidity gap on the UJ, 109.5, let's say, to 109.6. So this is only 20 pips, and given where price is at right now, it is about 80 pips to the upside. We do have this price level right in here that definitely could be respected. However, this area of demand, I really do feel like it is what a lot of retail traders who are just starting out on this journey would classify as their support level. And, this support zone, really, we're going to have to see how strong it is, given the fact that we did have some very large bearish momentum away from the supply up at the whole 111.6 level. Looking on the daily trend, we did have some rejection here at the 61.8 key fib level that happened on the 10th of May. And we can just see that we're so quickly approaching this whole zone. If we get this bullish close on the day for today, which is probable, we could maybe see some retracement up to the whole 111 level. We're going to say 60 pips to the upside just to keep it psychologically safe. But I'm not confident in the bullish momentum on the US dollar JPY at this time. Very strong bearish close last week. We do have some more wick right in here. This is about 60 to 70 pips of wick from the April 24th weekly candle. And really, the demand is looking to the downside. We have the same confluence occurring on our US dollar Japanese yen as the Euro USD. We've got our 200 exponential moving average on the weekly. We have the 38.2% fib. we do have some strong bearish momentum. And mind you, the 22nd of May weekly candle, we did get a bullish close. So this is looking a lot like how today is printing. We can see the aftermath, and really this area of demand does not look like a match for what is going on down at this whole area. So it would not be surprising to see price reach that within the week. We did have a lot of bearish momentum off that 61.8 fib rejection, and of course if we take a quick look at our Renkos, we are seeing a downtrend with those lower lows, lower highs, even what happened right here. And of course, remember, these are 50 pip bars, so take this into consideration, if you will, that looking at this, there's a lot of potential down here for buy limits at the whole 108.8 to 108.5 with a stop, I mean, really beyond 108. So it really depends on what your style of trading is. This is a swing trader's perspective, and given the outlook here, the dollar, this is the best you will see right now until our next student webinar. So if you are not yet within the Start Trading community, you can visit forexcommunity.online. We are just so grateful, so excited, and so blessed to be able to share this knowledge with you. And I promise you that given the time, effort, and energy, you can easily learn how to apply technical analysis. But the charts go beyond this. It comes down to realizing the human sentiment, that emotional indicator that we all have access to, and then really developing an understanding of the fundamental factors that allow price to move. I will see you, and this is Zachary Hogan. I am Zachary Hogan. At Start Trading, you can telegram me at IZXTG. Thank you, much appreciation for you.